Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, it is a very difficult market to figure out, but I do know one thing, and this is very interesting. This happened basically at the end of yesterday on Wednesday. Both J.P. Morgan and J.P. Morgan Chase and Morgan Stanley missed their numbers. That's very significant because it does kind of give us a little bit of a glimpse into the future. I think I'm going to show you this chart here next. Kind of interesting. This is a chart of basically the money center banks like J.P. Morgan, J.P. Morgan Chase, and like Bank of America, and like the other ones. And look at how they have started to fall in terms of the value of their stock. Interestingly enough, if you can take a look at the red arrow here, and by the way, if you're looking on TikTok, you can easily see this. Just go to the link on my profile. Click on the link, and you can definitely jump right over to YouTube. And I'm showing all the charts here. But what's interesting about this chart is that we have a situation where when they started to raise those interest rates, you start to see the value of the money center banks kind of take a dive down. And that's exactly what's happened here. Part of the reason for this is as interest rates go higher, the value of the assets that are held by the money center banks, i.e. mortgages and those kind of things, are actually falling in value. And this is what is going to create a squeeze, probably in terms of asset values. If you'll notice, in the last month or two, the number of the values of real estate has been going down. The reason for that, of course, is that as interest rates go higher, that means the value of the underlying assets go lower. Why? Because fewer people can afford them. And I do believe that by the end of the year, we should have a situation where I don't know if we're going to repeat 2008. Obviously, I couldn't predict that. I'm not Michael Berry, and I'm not, of that ilk. But as interest rates move higher, the value of the money center banks move lower. And part of the reason is, of course, is the assets that they held. Now, remember, in a bank, it's very unusual. The assets that are held by a bank, interestingly enough, are loans. So it's a kind of a bizarro world. In the regular world, assets are like, that we have are cash producing things, that produce cash, like stocks, bonds, real estate, that kind of thing. But in the banking world, the asset is the loan. So if the loan quality goes down, the value of the assets go down. And that's exactly what's happening to the money center banks. Now, why is that so important? Well, part of the reason that is so important is because the money center banks hold a lot of mortgages. They have disproportionate amounts of risk. And so the banks moving lower is not necessarily a good sign. As inflation moves up, as the recession gets rolling, banks are going to be in trouble. So stay out of the banking sector for right now. Not a good place to be. Now, I plotted on this graph the inverse of the 20-year bond. Now, that is the federal. The bonds are federal bonds, so U.S. Treasury bonds. As the U.S. Treasury rates go up, the value of the bonds actually goes down. I know that sounds strange, but that's what you learn in your finance class. Now, there is an ETF called the TBT, which is the inverse of the 20-year bond, and that has been doing fairly well as of late. Now, I have not bought this one, but I do think that it's worth taking a look at because I do expect them to have to move rates higher, probably as much as 1%. So it's a really strange thing is going on right now. The rates are going to go up. The value of cash is actually going up, and the value of other assets is going down. So it's very, very strange. It's a kind of a bizarre world that we're in right now. But one of the ways that you can take advantage of that is with this ETF called the TBT. And the TBT has been moving higher. Now, today it pulled back just a little bit, about $1.38, but I do believe it's going to start another run here. There is a consolidation on this ETF that starts right about here at about 24.33 and then moves up all the way, and that's about there, and then it moves up all the way to the pivot, and that is basically at 27.73. So this is, I believe, getting ready to reverse. I'm not in this currently, but I want to wait. When I get a green bar here, and I'm going to go to the daily chart here. When I get a green bar in this one, I'll probably be a buyer. Let me see if I can get rid of some of my annotations here. I've been annotating this quite a bit, and it's hard to read. So here we go. So I do believe that once we start to get a movement up, now we got a little bit of a hint yesterday, but today, but it's on weak volume. So I want to see it move up on a little bit heavier volume than this, and then I think that we might see this one move up. But this is going to be counter to the money center banks. The money center banks going down, of course, and the TBT, which is the inverse of that, going up. So I do expect this to move higher as it goes forward. So be very, very careful if you are looking to buy. If you're looking to buy right now, I would not be buying banks. Banks are probably going to move lower as the recession moves forward. I did make one buy today. Very unusual for me in this market. Just a very strange market in general. I did make a buy today, and it's a very interesting stock. This is a little bit speculative, so I'm not sure this is right for everyone, but I did buy this stock today. It's called CRISPR Therapeutics, and they're sort of the leader in gene editing, and all of these vaccines and all these things are using the technology from this company called CRISPR Therapeutics. Now, I bought it today. My buy was at 32.25. It's down a little bit at the close to 81.91, but it is up after hours. Let's look at that CRSP. I'm going to pull up the live chart here for everyone so that they can see it, and it gives you a little bit of a look-see on that. So this is CRISPR Therapeutics. This is the live chart on CRISPR, and I did make the buy. Basically, let's move it over to there. Yeah, this is the weekly chart here. You can see it's starting to make its move. On the weekly chart, we have a relative strength of 94, and the relative strength line is starting to make a move upwards. This is what you want to see when you're buying. You want to make sure that the relative strength, the strength of this issue, is getting stronger. Now, this is the S&P 500 right here. It is moving down. It is moving down. This one's moving up. So this is improving against the S&P 500. This is my guess, is that we are seeing, we are seeing owners, we are seeing funds come into this right now and move into it. Let's look at the fund ownership on this one. Now, normally I've been very, very careful buying in this downturn. It's not necessarily a great time to be buying, but one of the things that I am buying are stocks that I see a lot of. Funds coming into. Quite a few A+ funds here. As well, Fidelity Growth, Vanguard Health, American Century, Pro Funds. So a lot of A+ funds, as you can see, going all the way down here. So lots and lots of A+ funds coming into this one. So this one is looking, I believe, fairly good in terms of something to buy. So it is really, right now, I am very, very light, as you know. As you know, I'm very, very light on the stocks that I hold. I'm only holding one. I got taken out of McKesson. I set the stop a little bit too low. I got taken out, and then right after that it resurged again. So, but I just follow the rules. Try never to take any more than a 7% loss. Basically, what was the catalyst, I believe, for CRISPR was that the improvement in the relative strength line rating, and it moved basically from 74 to to 81, but basically then it moved to 94. So a lot of interest in this particular issue. Right now, as you can see, the makeup of the small portfolio, I have one full position in CRISPR. It's 12.5% of the portfolio. And we are actually, when this was taken, it was up. So it's right kind of on the cusp here. 87.5% of the small portfolio is in cash currently. And then I have bought this one position in CRISPR. Again, I was taken out of McKesson. That was the only other thing I had. So I'm really light when it comes to shares right now. Basically, just really in, these issues. Now, medical is doing well, so that's part of the reason I am looking at that. So, overall, the market is basically making. Overall, basically the NASDAQ and the S&P did have a follow-through day on June 22nd. Those were bigger gains with higher volume, but the NASDAQ composite fell on June 28th sharply and closed below the low of the follow-through day. So far the indexes are rebounding and are holding above the important June 30th low. After Wednesday's inflation report, though, indexes did make a rebound and made a strong rebound at that. So we are seeing after the inflation report, even though the inflation report was very, very high, it looks as if the market was calculating that in there. So we may have a little bit of a reprieve on the market, but still, it's not time to get really heavy. Again, I'm mostly in cash, as you saw, mostly in cash with this one position in CRISPR, basically just one position, 12.5%. As you can see, this is kind of like a pizza. This is like having one pizza slice, and basically that's the only thing I have currently. We will see how it does going forward. So one more thing before we get to before we get to the stocks individually, let's take a look at Bitcoin. Bitcoin is, and this is basically the monthly chart. As you can see, we fell below. We've basically been pretty much down the whole month, and then we had a little bit of peak above that, above the 2160, and then we fell back down. I believe that in the near-term future, we are likely to we're seeing a floor right about 21 or so, 21.6, but I think that there's a very high likelihood that it will fall below that. If Bitcoin falls below 16,000, then you're going to see a massive move to the downside, because Michael Saylor has has a huge margin account, and he's one of the largest Bitcoin owners right now through a company called MicroStrategy. So be very careful buying Bitcoin at this price. Not a good time to be buying Bitcoin. I do believe the trend, at least for now, is down. So not the greatest time to be in Bitcoin. All right. So thank you for holding on here, everybody. A little bit of yammering here. All right. Let's take a look at MDU. And see, kind of what's going on there. MDU, and interesting. Okay, so this is this is a pipeline company. This is an area that is starting to wane a little bit. I think you ought to be a little bit careful in this particular area. Now, we were doing great when it came to when it came to oil and gas stocks recently, but as you can see, in the last few months, since really March here, we have been in this downward trend. So again, I'm not as interested in buying something that's moving in a downward trend. This is clearly in a downward trend. Now, we did have a little bit of an we do have a little bit of an improvement in the relative strength. It's up to 70, which isn't bad. And of course, the S&P 500 is going down as well. So here's the thing. Right now, this area this diversified operations area, 96 out of 197. I think that there are better opportunities out there. Right now, the area of the market that seems to be getting the most action, at least in terms of the size of what's coming into it, is medical. So be reticent of that. So I probably would not be a buyer of MDU. It's a good stock, but I don't want to buy anything in a downtrend. So let's look at APH. Take a look there and see what we've got going on there. That's Amphenol. That's an interesting company. This is a company that makes connectors. Very old company based in Pennsylvania. Very, very good, very well run company. Interesting to see this one come in here to the. It's very interesting to see this one come in. Haven't seen this one in a long time. Again, same situation, same problem that we're seeing, and that is we're seeing a decline here in the price. So basically 64.94. We do have some very nice sales increases, though. In terms of the fundamental analysis, this is looking very good. But in terms of the technicals, I'm not really a fan, even though it does have a low PE ratio. So not looking good in terms of that. I would be careful about buying this one. I don't think it's turned yet. I definitely think this is a good watch list stock, but I'm not sure that it is going to it's going to win. So right now I would watch list this stock, but I wouldn't buy it just because it is still in a downward trend. So I would watch list for now. So I probably would not be a buyer of this one just because it is in this downward trend. We don't like to buy anything in a downward trend. That just doesn't work well in general. So we do have a situation where we have the 50-day moving below the 200-day. So we definitely are seeing this in a downward trend. So let's look at the checklist. Very good checklist, though, 78%. On the pattern recognition, we are about 7% below the pivot. But unfortunately, the last pivot was 260 days ago, almost a year. So basically, I don't think this is viable right now. I think you want to watch list this one, but I don't think you want to be a buyer on this one. Just not looking, just not looking really good. It's just not really looking good there. All right, so let's look again at some more comments. Thank you very much for that. All right. Hey, there you go. Okay. Corporations loan rates go up as well. So prices of, yeah, absolutely. Well, here's the thing. The interest rates are going to cause corporations to have to spend more. The money market, which is essentially what they call short-term paper, it's 270 days or less. That's what that's a high quality corporate borrowing. That's what they call money market. You should start to see the yields go up a little bit on that. The problem, of course, is that the corporations will not be able to make as much profit. So a lot of companies are starting, we're coming into earnings season, and a lot of companies are already starting to warn, and this is really critical. Yesterday, of course, JPMorgan Chase and Morgan Stanley both disappointed, and I think you're going to see that in a lot of companies. So right now, if they're going to try to raise prices. Here's the problem that the companies are going to have. They're going to raise prices, and that's going to kill sales. And then, of course, that's how they're going to be passing along some of these added expenses. But the problem, of course, is these added expenses will cut into their profit margins. So what is probably going to happen in the next this next earnings season probably will not be that stellar. So just be careful about this. And we might be able to have some opportunities possibly to do some shorts into the earnings. I'm going to be looking at the earnings calendar, see if there's any opportunities to do some shorting on earnings, because I think that's going to be a good way that we can, even though we're partially out of the market, we can pick up some money there. So kind of a good thing to look at. All right, MUSA. This is a great one. This is interestingly enough, this was kind of bucking the trend. This is Murphy USA, and they are in an expansion mode. I know that because My office is right next to one that they just built. Typically in retail stocks tend to go up when there is a number of when there's an expansion. Right now in the Midwestern area and in Texas, MUSA is adding locations. This is a good thing for the stock, and it definitely is showing on the chart here. This is the daily chart. Let's go to the monthly chart to kind of get a general idea. Look at this thing. It's been excellent, and has a 99 relative strength. That means this is in the top 1% of all stocks right now. The question is, can we buy it here? Well, today we moved through the pivot. Probably the best time to have bought it, and of course, it's woulda, coulda, shoulda always. I hate that. Is when it reversed above that line. What I'm doing here is I'm drawing a reversal line, and this is when it's shifting from a downward trend to an upward trend. As you can see, 1, 2, 3, 4, 5, 6, 7, 8 days ago, that's when it made its move. So now it's in the buy zone. So this is buyable here. The question is, can it hold on to the pivot at 362? That's the question, is can it hold to this pivot right here at 362? But this is definitely buyable right now. So if you do decide to buy this one, this is not bad. It's in a very good area of the market. Retail super mini markets, 4 out of 197. So one of the things in a recession, one of the things that typically does well are convenience stores, interestingly enough. And they also sell gas, but it's mainly a convenience store chain, and they typically do well during recessions. So this one definitely is absolutely viable right at this moment. So this is a very good one to bring up. This is, MUSA is viable now. Okay, so this one is definitely viable. You can buy this one, but be careful because we're still in a downward trend. But right now, MUSA is viable, but we are still in a downward trend, so you have to be super careful here when you buy these things because the overall market is moving down. So don't go in with too much size. Try to go in maybe half position or full position, but no more than that, because if the market really gets moving down strong, even these stronger stocks will give up the ghost. But right now, this is looking very, very good. The relative strength line is excellent on this one. This blue line here, it's moving up. 98, 99 is where that's at. And you have this very, very, very good looking chart. So this is viable, and I really appreciate that. That's a great one. I'm going to put that down here on the recap, MUSA, and that's viable. And so I'm gonna definitely note that on my on my thing. Probably put that out on the action trade alerts maybe tomorrow or so. But that's really, really good. Thank you for that. Really appreciate that idea there. That's a very, very good idea. All right. So I read somebody today that if we tracked inflation like we did in 1981, absolutely that's true. I was around back in 1981. I was actually in undergraduate school, and I was trying to graduate and get a job, and it was terrible. I can attest to that. It was just really, really tough times. Everything was going up. It was it was not a good time. But you're right. I think it would be a lot of that. All right. Also, hey, thank you very much. Shelter takes up a third of CPI. Yeah, absolutely. Shelter is up way more than 9%. Absolutely, this is so true. And I know this for a fact because I have some. I do invest in rental real estate as well. I have some units, and I haven't really pushed up my rates all that much. But believe me, everything around me has been going up. It's just amazing. So, hey, you bought CRISPR. I think you'll do well with CRISPR. It's going to be a little bit of a ride. I'm going to try to keep everybody informed here. All right. Thanks, Matt, so much. AMN. Let's get that. Let's take a look at AMN. My go. Oh, okay. Healthcare. I like this area of the market. I'm not a huge fan of healthcare, but right now I am because it's one of the areas of the market that's doing very well. This one is basically a staffing company, um, and looks very good. The relative strength is very good. 96, nice relative strength line. The question is, can you buy this? Well, it looks like this is moving to a higher high. This is the reversal line, so we definitely could possibly buy this, and we're moved above the 200-day line. This is really, you got to see this when things start to move above the 200-day line. That's when you start to get interested in a market like this. Now, I would be a little bit careful with this right now just because of where it is, but it's looking stronger. So let's look at the checklist, and it's an 89 checklist. That's really excellent. But one little red flag here is it's not being heavily accumulated by the funds, and I'm not surprised because typically staffing companies is not a big area for the funds to. They're usually looking for more unique technology, but I definitely think this is viable. Here's the thing on this one: I would be careful. I would not buy more than I would in a possible small position. Um, possible small position buy, and I would say maybe one quarter position. And the reason here that I'm so conservative is typically, you definitely can't. This is viable, but I wouldn't go in. I wouldn't go in with heavy guns. I would go in with very, very light, maybe a quarter position here. And part of the reason I'm going in so light is because, well, it's just the nature of this market. This could easily pull back. I mean, it's quite volatile. It's 116. It could easily pull back to 110. That's sort of where the beginning of this consolidation is. I definitely think it is, a potential. But here's what I would do. I probably would not. I would see if it pulls back to the 21-day line. So if I were going to buy this, and I don't think I would, if I were going to buy this, I would go and buy it off the 21-day line, which is basically 109. So that's where my buy point would be would be equal to 109, and that is the 21-day line. So that's where I would consider possibly looking to make a buy here. Would be about this area here. Basically, it's right at this green line. That is the 21-day line. That's where I'd be looking to buy it. So I wouldn't buy it here. I would use a limit order possibly at 109. If it pulls back to that 21-day line, it's probably going to bounce higher. So here's how I would do it. This is a very volatile stock, as you can see, because it's moving 6% above and below. So I wouldn't buy it here at this level. It's too high. Wait for it to pull back to the 21-day line, and then I think you might have a good buy. It's a good stock. It's just you don't want to buy it extended. And unfortunately, if you buy it 5% above that 21-day line, it's not going to be it's probably not going to have a lower percentage. That's not as good an entry. So just look there. All right. Oh, tremendous provision. Provisions are only to Windows. Yeah, that's an issue with CRISPR. But the one great thing about CRISPR is the technology is used by a lot of other people too. So interesting that too. Hi, Jim. What are your thoughts on PANW? Of course, this is Palo Alto Networks. I had a short on this one, by the way, that I closed. I couldn't quite get it right. And I had a short on it. I had to close it just because it wasn't working on me. And now, of course, it pulled back. And again, I'm just too impatient. That's part of my problem. Is that I'm too impatient. I think I have. Let's see if I have the yeah. So see if I can show you where I did short it, and then I closed the short. So let's see if I can put that up here. Yeah, there we go. Okay, so basically what I did is I did a bear put spread here. It moved down very nicely, and then it moved back up, and now it's moving down. I waited and I closed it. I shouldn't have because this reacted basically exactly like they do sometimes. It came down and then it went right up to the 200-day line, and then it started moving lower. So I suspect this one's going lower, I don't think you want to buy it here. I think you want to see it get some support. The relative strength line is starting to point down, so I definitely think this is going lower. I suspect we're going to get some support right about here at the bottom of the consolidation, and that would be, that would be right about 223. So currently we're way above that at 490. So here's the thing with Palo Alto, I think it's gonna move lower. So I don't think you want to be buying it right now, but I definitely think you want to watch this one. So here's what I would say on that. PANW is moving lower. Possible support at 423, and the reason for that, of course, is that's the bottom of the consolidation. So that's kind of what I'm seeing for Palo Alto Networks. That's kind of where I'm seeing it. So I definitely think we're in a downward trend on that, and I think we're probably going to see it get some support. It may be, I don't know if it's going to go quite as low as 423, but I kind of am seeing that because it came down, it bounced there, and then it moved, and then now it's again in a downward trend. So even though it's up after hours, I'd be very careful buying this. I'd be very, very careful buying this. All right, let's look at Google. And of course, they're splitting tomorrow. Here's the thing. Here's what I've found in the past. Typically, a stock on the day of before a split will be at its highest level, and then it will move down. And the reason for this is, what happens is that let me see if I can bring it up. That would help, wouldn't it? GOOGL. There we go. All right, Alphabet, super. All right, so here's the thing. It looks as if it settled right at about this 2,200 level. So we're probably going to see, yeah. So and it's been pulling down. Interestingly enough, it was all the way up here at 2,400, and now at 2,200. So my guess is, this is going to be, the trend on this is downward. So tomorrow, expect to see, expected to see it to trade up a little bit. It's trading up in after hours, but then, you could probably day trade this tomorrow, where it trades up tomorrow, and then I would sell it as soon as it starts dropping, because what's probably going to happen is that people are going to get the split, and then they're going to try to rationalize their portfolio. So they're going to start selling off some of the issues. So it probably in the short term is going to go up, but I suspect very, very quickly it will move lower. So if you want to day trade it, that's not a bad idea. Just keep a very close watch on the stock, because it's likely to trade up and then reverse lower. And the reason for that, of course, is that a lot of people will be selling it once they get the shares. So they're not going, if they have 100 shares, they're probably not going to keep they're not going to keep 2,000 shares. They're going to be selling that off. So it's going to create some selling pressure almost invariably after the initial euphoria. So it's going to it'll probably trade up, and then we'll see it move lower. All right, let's look at Disney. This was one that I did make a little bit of money on. I had a bear put spread on this one. I did close it early, and we were fortunate on that. Let's kind of take a look at it. There we go. And come on over here. There we go. Okay, so I did have a bear put spread on this one. As you can see, I opened it. here, and then sold it there. I opened it there, and I sold it there. So it's continuing to move lower even after my buy percent. But I made a profit here. Let's look at this. I made a profit here and then here. So we were doing pretty well. We were shorting it all the way down, but right now not a good time to short it, I don't think. And the reason is, of course, the reason I don't think it's a good time to short it is because it's almost out of gas. It's below 100 at 92.20. Watch for this one. I think this one probably will bottom. So I wouldn't be a short on this one, but I wouldn't be a long on this one either. Now, here's what I'm looking at. I think it's going to reverse basically at this consolidation here, and that would be about 80. So I think it has a little bit more to go down to about 80, and then I think we're going to see a bounce. And the reason I think we're going to see a bounce, of course, is because this was the low in the COVID. When the COVID crash happened, this was the low in the COVID crash. So this is the test. And I do believe it's going to come all the way back down almost to that 80. So my guess is for right now for Disney, I would be extremely careful owning Disney. I know that it's a favorite for a lot of people, but I am not a fan of it because I think it is potentially closing lower. It's going to move lower. This is the weekly chart that we're looking at here. The profits have been very good on Disney. As you can see, the sales have been up as well. A lot of people want to travel, but I think that it's in a situation where it's probably going to move a little bit lower, and so I would not be a buyer of Disney. So right now for Disney, I would say skip it. Skip Disney for now. Wait for reversal at, I think about 80 is going to be where it's going to reverse. That's kind of where I'm seeing Disney basically reverse, and it's going to be right about at this red line here. I see it coming down here and then reversing higher. But right now, it's not a time to be in Disney. Relative strength is 16, not very good. Remember that when we were looking at the other stocks that we were looking at had relative strengths, way above 80. So you typically don't want to buy a stock that has a relative strength below 80. So that definitely is the case here. If you look at the checklist on Disney, it's a 56 checklist, not a very good checklist for such a big stock. It has a relative strength of below 80, so it fails there. It's not being accumulated by the big funds. As a matter of fact, it's being sold by them. If it was being accumulated, we would have a rating here, but it's being sold by the funds. And the earnings per share, it's still very good, but it's less than 80. It's less than it was. So that's something to watch out for. It's also off the all-time high by more than 15%. Typically, what happens is most of the growth of stocks happens between 15% of its all-time high. So that's when you want to be buying it long, is when it's at near its all-time high. You want to be doing that. If it moves below that, then we kind of wait for a reversal. It's very difficult to buy off the bottom. So just you want to wait for a reversal before you buy. Right now, that's just not the case with Disney. It's moving lower, so it's not really that great, unfortunately. All right, thanks, Mr. Jeet. All right. Yesterday you compared Dollar Tree to Walmart. We ran out of time, but I wanted to. Okay, no problem. Thank you so very much. This is a good area also to look in, possibly for what. So let's do the comparison here, because I know that you're trying to look, and this is a good area to be looking in, I think. So let's look at Dollar Tree DLTR. Okay, that Dollar Tree, yeah, and let's look at Dollar Tree, and then let's look at DG, which is Dollar General. That's Dollar Tree, and let's look at Dollar General, DG. So this is going to give us an idea. Obviously, Dollar Tree is the superior one here if you're comparing them. See? If you were to start out the year and you were to buy both the stocks and you spent the exact same amount of money, you would have been up in Dollar Tree. It would have been up on Dollar General, but only a little bit over 10%. If you had done this with Dollar Tree, you would have been up 70%. So that's quite something. That's quite something there. So basically, what you have with with Dollar Tree is it's doing approximately 60% better than a Dollar General. So DLTR is basically, and I'm just looking at this 170, and DG is 110. So DLTR is 60% better. So that's pretty amazing when you think about it. But if you look at this comparison chart here, Dollar Tree is essentially, it's up to about 170. If you just had cash, that would be 100. And Dollar General, of course, is 110. So it's up a little bit more than 110. It's about 113 or so. So basically, Dollar Tree is 60% better than Dollar General, at least over the last year. Okay, because we started at the same place here. We started basically at the same place. That's basically at, there it is, 100. I don't quite have it right. Sorry about that. That's 100. That's if we had just cash. Just cash, did nothing, cash. We would have been up basically on Dollar Tree, 170%. So we would have been up 70% over cash, and Dollar General up 110. So thank you for that question. That's a really great question. I'm going to try to put in more of these comparisons because I think it's a lot easier to tell kind of what's going on with them. At least it is for me. All right. What do you think about Boeing and Apple? Well, I think they're both, unfortunately, not doing as well as we would like to see. I think they're both sort of in trouble. But I think Apple, of course, is a little bit better than than Dollar Tree. But let's compare them together. Let's look at BA and see if we can get that one in. All right, and then Apple. Let's put in Apple. And let's look at that. Them together. So if we're comparing them both together, this is Apple. Well, I'm sorry, not Dollar Tree. Excuse me. This is Apple versus Dollar Tree. Dollar Tree, much better stock, believe it or not. Isn't that interesting? How that kind of worked out. So let's look at Apple, Dollar Tree, and Boeing. I'm going to put Boeing in there. As you can see, Boeing, it's if you invested $100 at the beginning of the year in all of these three stocks, let's do that. Basically, if you invested in Apple, you basically did as good as cash. Not very good, really. So you might as well have had cash, less risk. Okay, that was Apple. If you invested in Boeing at the beginning of the year, you're looking at basically losing 35 cents for every dollar. So that's not good. But if you invested in Dollar Tree, you're going to make 70 cents for every dollar that you invested. So that kind of gives you the idea of where things are. So what do I think about Boeing? What do I think about Apple? I think Apple is, you might as well be in cash. Boeing, possibly a good short. But the strength has been in the retailers, especially in the discounters. Not all the retailers, but the discounters. By the way, I closed a position short on Costco. I was totally wrong on that, but it is, the retailers, the discount retailers seem to be doing fairly good. So I wouldn't recommend, unfortunately, either of these. Terrible. Let's look at PSTH and see what is going on with with PSTH. Go to that chart. All right. PSTH, and we're almost at the end. I'm sorry. I love going through these, but I have a limited amount of time, unfortunately. And let's look at PSTH. And that's Pershing Square. Okay, so this is the SPAC. This is the Bill Ackerman SPAC, and let's look. Let's look at this one. This is the Bill Ackerman SPAC. So, let's see if we can give a grade on the Bill Ackerman SPAC. Doesn't look too good to me. All right, but let's compare it against Dollar Tree. All right, so let's compare this SPAC. This is the Bill Ackerman SPAC. So basically, here's the thing. If you invested in this Bill Ackerman SPAC and you kept your money in the bank, guess what? You would have done better with your bank. You would have done better with your cash. That's cash there. So what if you were smart and you invested in CRISPR, CSPR? Let's see what would happen there if you did that. Because I just bought this, so I want to find out myself. CSPR. I think that's right. Did I get that right? No. I'm trying to get it right. CRSP. There we go. All right. So obviously, if at the beginning of the year you invested in CRISPR, you would have lost a lot of money. Now, what I'm trying to invest in, of course, is this movement. So it doesn't quite jive. So let's put in, just for fun, Dollar Tree, DLTR, because this one has done great. And I was in it, and I should have been in it more. But at least since here, these are both going up, which is good. Pershing Square flat. So I wouldn't be an investor in Pershing Square. SPACs are tough. Yep, I'm the one that said Dollar Tree was a killer. You were right, absolutely right. I've owned it before. I've owned Dollar Tree before. I've taken profits in it, and you know what? I'm too much of a swing trader. Let's see. I just want to see where I was in it, because I know I was in it last year. So let's look. You're absolutely right about Dollar Tree. Let's look at Dollar Tree. Let's see where I bought it. I know. Okay, there we go. And let's put, yeah, okay. So I actually was in Dollar Tree, and I took profits. Yeah, I gotta get more disciplined, because you see, I bought it here and I moved it. I ran it right up here, but I didn't buy it then. I basically sold it. I sold everything on March 21. At 173. It still hasn't quite come back there, but this is a good stock, and I definitely have it on my watch list. I bought a full position at 157. This is back on the April 7th. Then I bought at 172, and then I sold. So yeah, great stock, and it's looking like it's even doing better. Look at that relative strength line. Look at that, and that's just moving very, very nicely as well. So yep, you're absolutely right about Dollar Tree. That's definitely on my watch list. And it's the relative strength line is moving up very nicely. 98 relative strength. I love that. So yeah, and it definitely is viable right now. It's right in its pivot. That's right here. So Dollar Tree is viable. All right. And you absolutely did recommend it. Absolutely. My PSTH chart looks a lot different. Let's see. Oh, never mind. Okay, great. Yeah, you're looking good with Dollar Tree, and it is viable right now. Dollar Tree is absolutely viable right now. All right, everybody, thank you so very much for taking a look at the show. Please tell your friends. I need some more people. I need some more people to look at this show. I love doing it, but I just need some more. I need to get it out there to more people. If you could, please, please, please like the show. Please like it. I love it when you like it. Also, if you're watching on TikTok, you can see this on YouTube, youtube.com/Dallas Trading Floor. And also, if you are not already a member of the email list, Dallas Trading Floor, super easy to get on that. All you have to do is go to www.Dallas Trading Floor. Well, I'll be back tomorrow at 5. Thank you so much, everybody, for taking a look at the show today. And happy trading. And I'll be back at 5. And stay safe. One of the things is, still very tough market. We're in a downward trend. Not a good time to be very exposed. Lots of cash right now is probably a good play. But, we did review. Let's review several ones. CRISPR, one that I bought today, and Dollar Tree looking very good. So we got 2 out of that are looking fairly good. So I will see you back here tomorrow. Happy trading.